Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I really want to follow up, as I normally do, I suppose, on what I've been doing lately and what happens as a trader as the market conditions change. And my goal at least is to keep these shows as evergreen as possible as opposed to giving you a brief market update. So I want to show you where we are based on what I'm following. So in case I get hit by a beer truck, you can continue to follow these things. And along those lines, I want to talk about the methodology in action. There's really not a whole lot of happening with the methodology in action, but I think it's important for me to talk about those things too when there's nothing going on or there's not anything going on. So I have some random thoughts on that. Now, for the market timing, again, I don't want to give you just a quick update, but I want to show you and follow up on what I talked about last week on what it would take for me to get bullish. And then also, I did the pitch recently, and I showed some setups in there. And I want to follow up on those setups. So if you, in the future, see such setups again, maybe you might want to take them on your own. And I'll have a lot of thoughts to say about that. And specifically, I'm going to focus on crypto, but these things can be used in other markets. Housekeeping, I do take requests. As I say each week, it makes my job a lot easier knowing what I'm going to cover for the week as opposed to waking up and thinking, what am I going to talk about today? So you can see those requests at davelandry.com/contact. I do a show that's still live every Thursday, and we keep threatening to go back live here again. I'm sure we will soon. I think the live shows are so much better. But anyway, I do a weekly show, davelandry.com/webinar to register for that. Register even if the link is old, and you should be registered for all shows. If I can't fit your requests into this show, I can most likely fit them into my weekly webinar, Dave Landry's The Week in Charts. If you want the slides from this presentation, all the other presentations combined, davelandry.com/StockCharts. I'll also give you a bunch of goodies. And hey, look, new Twitter handle, new Twitter owner, new Twitter handle, TFollowingMoron, at TFollowingMoron. So please follow me on Twitter. All right, let's talk about the mystery charts and the methodology in action. Now, we don't have any mystery charts this week, and methodology in action as well is not a whole lot of action. And one thing I woke up thinking about that I want to talk to you guys about is that there's an ebb and flow, and then an ebb and flow. You look for setups, and a lot of times you can't find setups, and sometimes my clients are like, Dave, we can't take any more setups. You're finding way too many setups for us. We can't take them all. Right now is not that time. And as you know, lately I've been showing you these mystery charts, which are the setups that I give to my clients. They haven't been triggering. So with no trigger, there's no position management, obviously. But the good news is no capital is put in harm's way. And on a lot of these, if you go in and look at them, if you would have taken a setup without the trigger, in other words, if you didn't wait for the trigger and just jumped in, you would have lost money. So that makes me feel good that, hey, they didn't trigger, but you also didn't put any capital in harm's way and lose money. Now, no new setups for the foreseeable future. Now, I hate to use that word foreseeable future, and that actually comes from one client who emailed me once, and there's been more than one, and it always seems like I'm picking this one guy, but there's been more than one. But one guy's like, hey, I don't see any setups for the foreseeable future. And that night, I recommended two stocks, and he said he was taking a break, and I don't know whether he took a break before that night's service or not, but I recommended two stocks that turned into huge winners, and I didn't want to rub salt in his wounds and call him up and ask him. But anyway, we'll need a bit of a pullback or a pullback from the pullback. In other words, for the market to pull back a little bit from this recent run we've been in, which is actually a bigger picture pullback, and that'll give us some pullback setups or a rollover to resume the downtrend. And right now I'm seeing some shorts setting up. I don't feel like I want to go after them right now. They're mostly in longer term downtrends. On the short side, I prefer setups that are just beginning to roll over. Kind of the bigger they are, the harder they fall. Now you have to do your homework. I'm going to show you one case where I was pretty late on the market, still did okay, but you really got to keep doing your homework every day, and you got to pay attention and keep looking. And that's one unfair advantage I have in having a trading service, for stocks at least, is it forces me to do my homework every day. And in reality, because I missed some huge crypto gains, I probably should have a crypto service too, because that would force me to do my homework there. So I'll explain that in just 1 minute. But like the aforementioned client, it's like a lot of people give up. And I see it all the time. Like right now, I'm telling everyone, hey, you want to mostly sit on your hands. And my older clients really appreciate that. But the new people coming in, it's like, well, I'm not going to pay this guy to tell me to do nothing, right? But that's exactly what you should do. And as I've said 1,000 times, years and years ago, I was part of one of the first websites out there, and I had a trading service with them. And the salespeople would call me and beg me to recommend something, anything, because when I recommended stocks, even if they lost money on those recommendations, we lose maybe a few clients, but we wouldn't lose many. But when I didn't recommend anything, they would lose clients. And you know, I'm not going to recommend stocks just for the sake of recommending them so the salespeople can make money on the service. And I know it's kind of cutting off my own nose, right, despite my face, but longer term, I would rather not put my clients in anything that I'm not going to take myself, not put them into anything that I wouldn't take myself. And right now, conditions just aren't fantastic. They were improving for a while, which you'll see, but now they're just not fantastic again. So we might be back to a little bit more waiting, and that's okay. In the last pitch, I talked about a couple of setups that were 230 EMA breakout system setups, and I want to follow up on that. I find that sometimes you'll see someone, they'll show a setup or whatever, then you got to go back and try to find a video. And I think that if I continue to follow up with these things, good and bad, and maybe like in some cases where they don't trigger, I think there's a lot more to be learned versus me give you my opinion and a setup and then go off and do something else. But anyway, let's talk about the 230 EMA breakout with a focus on the crypto markets. So I'd mentioned a 230 EMA breakout in Ethereum in the last pitch. And it's a really, really simple system. You don't want to trade mechanically, but after something's been bottoming out like Ethereum and especially Bitcoin, you might want to take a look at this because it has the potential to get you in that market really, really early. In fact, all you need for the trend or the breakout, so to speak, is 2 bars of Landry light, and that just means 2 lows greater than the moving average, and I'll walk you through it. And then you want to enter above that 2-bar high plus a little wiggle room, and you want to stop out at the 30 EMA should things go horribly wrong. So let's take a look at that. There's bar 1, Landry light, meaning that the low is greater than 30 EMA. There's bar 2. By the way, this comes from a system I published in 1996. I think I wrote it in 1995. And it was my first article for stocks and commodities. Little nostalgia here. This actually launched my career. Some guy was trying to start a hedge fund. He contacted me. He thought he had the Holy Grail. It was sort of something that failed miserably, and I kind of fired him. And the other hedge fund manager who he was going to use for the trading was impressed that I fired this guy. And he kept me on for a long, long time. And that was sort of the start of my career, or the actual start of my career, I should say. But anyway, I digress. But you can find that. You can find it for free on the web. I think it's like $2 from Stocks and Commodities, but there's enough copies floating around. You should be able to find it. 220 EMA breakout system. And you could find a little bit more details about it on my YouTube channel, youtube.com/C as in Charlie/Dave Landry. And look at the trading quick clips. Anyway, 1 bar Landry light, 2 bar Landry light. And if you look down below, this just counts the number of bars of Landry light up or down. 0, like you have here, would be none. Enter above the 2 bar high plus a little wiggle room. Really technical term there, but basically you just want to don't enter just above the high. Give it a little room just in case it fakes out. It comes right back in. And you'd be surprised at how much trouble that'll keep you out of. Now, the more wiggle room you give it, the more you risk, of course, buying the high tick, okay, and the frustration that comes along with that. But you also avoid a lot more losing trades. So there is a trade-off on how much wiggle room, and that depends on the volatility of the market itself. So 16.25, I think, would have been a reasonable entry on this, and you did go long if you were following the system, obviously, and I'll show you some trades that I took in just 1 second. Anyway, here's Bitcoin. Like I said earlier, I wouldn't rush out and trade this system mechanically, but if you see something like Bitcoin that's been bottoming out forever and you're anxious to catch that low, first off, no, don't do it. Don't try to catch that bottom. Don't bottom fish. But I think it's okay to look to get in at the first signs of a possible breakout from those lows. So you got bar 1, bar 2, bar 1, bar 2, Remember, this counts the number of bars of Landry light. So it's at 7, 1, 2, 3, 4, 5, 6, 7 lows greater than the moving average. You can see as this market bottomed out, it's green, it's red, it's green, it's red, kind of a Jackie Mason kind of market. Or lately I've been calling it an Aussie man market. Yeah, nah. Anyway, above that 2-bar high plus a little wiggle room. So about 21,250 would be a good entry on Bitcoin. I remember the first time I bought Bitcoin at 4,000, I thought I was nuts. And then at 12,000, I thought I was crazy. And 18,000. Anyway, I digress and reminisce. Today's a lot of digressing and reminiscing. All right, bar 1, bar 2, this is Dogecoin, Dogecoin as I'd like to call it. Another one of those S coins. 2 bars of Landry light. You want to enter above that high plus a little bit of wiggle room. So a plausible entry right around there would be your buy. And you can see it's ran about 50-60% from there. Now, the question is, how did I do on this? Well, not so good. I'd forgotten to look at Dogecoin. In fact, I don't think I ever made a dime on Dogecoin. I've made a lot of money a while back in Sheeb when it took off. But for some reason, I just haven't had any good luck with the Dogecoin, at least up until now. And John Z from my Facebook group, you have to be a client of mine, but it's cheap to become a client to participate in the Facebook group. The group itself is free. But anyway, he was talking about Dogecoin, and I actually missed a lawn, which really aggravated me. This was like a 100% run or so. Anyway, so I got in a little bit late on this one, thanks to a little nudge from John Z in my group. And here's the actual trades. I didn't bet the forum, so it's not that huge of a deal. But all I did was once I went in at the market, I put in a limit order to sell 20% higher for half of my position. So I got in pretty darn late, as you can see, and then I sold out half there. And then I'm going to trail the stop at probably a little bit less than break even on that and try to hold on as long as you can. But you can see, not all the time, but if you do find something like this that's been basing out forever, sometimes this 230 EMA system could be a great little system to get you in. And one thing I love about teaching is I kind of learn as I go. And I'm just noticing, look, bar 1, bar 2, we had a setup right in here, okay? Where would you have gotten in? You would not have gotten in. Very good, because it did not get above the 2-bar high, even without the wiggle room. No capital put into harm's way. All right, so a lot of times people are like, okay, Big Dave, what would it take for you to become bullish? And actually, they usually ask, where exactly would you become bullish? Well, it's more of a process, and as I alluded to you earlier, I want to kind of walk you through this process just in case I get hit by a beer truck, so you guys will know what needs to be done in the process. Almost turned that into a little bit of a word salad. The process is the process, and then in the process of the process, I better be careful before I get in trouble. All right, so hourly Landry light. Well, last week we had upside Landry light, which was encouraging, and as I've said recently, I have one client that pays careful attention to these hourly charts, and he does his market timing, his longer term market timing off of them. Now, he's out of the market right as the market tops, and I think within about a day of the market top, if memory serves, in prior presentations, I showed how we had all these hourly signals. The only downside is occasionally he gets out of the way and the market goes straight back up. And that would be known as a whipsaw. But I think it is important that you do pay attention to the hourly. And because of this client, I have found myself paying more and more attention to hourly charts. And then I'm going to show you a 4-hour in just a few minutes. But it is important to look at the smaller time frames. But just be careful not to get too caught up in them, because you don't want to chase your own tail. Now, unfortunately, our Landry light went back to 0. We had a lot of green for many, many hours, okay? Days even. The market pulled back to the EMA, and that's not necessarily a bad thing. That's actually a pattern I call a Landry light pullback, and that is a tradable pattern. So if you were trading that pattern on that pullback to the EMA, you put in a buy somewhere around here. Anyway, so that's the hourly. But what's kind of cool is the 4-hour chart, even though the hourly has come back in to kiss that moving average, the 4-hour chart still has Landry light. So I thought it'd be kind of cool to show you that. I know you probably want to party with me. Now, the only thing I want to point out, no matter what this indicator, or as I like to call him, the illustrator, is saying, you always need to look at the net price movement. If the market hasn't gone anywhere for a while, then it might be becoming sideways. Now, maybe it's consolidating in that trend, but you might want to think twice before getting too bullish, even though you've got a lot of green down below after that market begins to go sideways on a net basis. So on an hourly, on a daily chart, we have upside Landry light. As you can see, lows are greater than the moving average. If you look down below, you can see that 6. Again, this just counts the number of bars, not the magnitude. 10, where I have these little reference lines set, would be a good point to use as a possible trend developing. But of course, you always want to look at the chart itself. So 10 bars of Landry light, okay, we got a possible trend. But let's make sure we look at the bars themselves. And in this case, I just grabbed the spiders, but you could see the spiders were at 384 6 days ago, okay, over a week ago. And where are they now? At the time I'm recording this, they're at 384. So net, we have lost a little steam in here. We are going sideways. So always, and I'll beat this dead horse quite a bit, but always look at your charts no matter what your indicators are saying. And often I'll say this, and I don't want to offend anybody who uses a lot of indicators, but from almost every case I've ever seen with someone who uses a lot of indicators and actually trades, and I guess that's one caveat, you could take away all those indicators and they could still trade. Because sometimes I'm like, well, don't you have a signal here? And they're like, yeah, I don't like the chart. You know, so it's kind of like, well, why not just look at the chart first and decide whether or not you like it? Do you really need those indicators? And I think that some of these people sort of hide behind their indicators, and I really don't think they need them. But that's another story altogether. Now, weekly chart, obviously, we're not going to have weekly Landry light just yet. So there's a 30 EMA, which is becoming one of my favorite EMAs. Even on a weekly basis, I think it could be pretty cool. But you can see that it's been mostly red for a long time, most of 2022. We did have a little green right there, as you can see, one little bar. And then back here, we actually had 2 bars. You really have to squint your eyes, and that gave us a false signal on the TFM 10% system. But even if you took that false signal or whipsaw signal, it's a real signal, but it's a whipsaw, and it's not the designer's intent. Remember what I just said about indicators and stuff? Okay, well, I'm kind of the same way, guilty, right? I had this buy signal, and because the market wasn't going higher, I wasn't very excited about it. In fact, I didn't even notice it because the market was already coming back in by the time I had the buy signal. And the designer's intent, so to speak, for a trend follower like myself is to buy on strength, not on weakness. So there's the weekly Landry light with a 30 EMA. All right, let's take a look at proper order. Now, proper order, this is what the aforementioned client uses for a lot of his market timing to get him out of trouble quickly in the markets. And again, you will have whipsaw, obviously, if you're following an hourly chart. But you can see we've been green for a long time. Now, all this green and yellow and red does below is if the 10 is greater than the 20 and the 20 is greater than 30, and you can see these moving averages up here. These are my bow tie moving average. 10 is the simple, and 20 is exponential, and 30 is exponential. And I've discovered the relationship between these can really help you in the markets and the way they interact with each other. As I was saying in the last week of charts, I believe, if the 10 was an exponential, it would be really jagged, and you wouldn't get these nice, clean bow tie signals sometimes that you get off the bottoms and off the top, especially in the daily charts. Anyway, so we've been green for a long time, which means that 10, again, is greater than 20, and 20 is greater than 30. If you look closely, you could see that they did kind of come together, but that was just a kiss, so to speak, but no cross. And by the way, as I said quite a bit, I'm such a nerd. When they program this in with the red and the yellow and the green, it actually turned out pretty cool. And I probably should do more presentations just on this, kind of like a red light, yellow light, green light in the markets. Like, okay, market's improving. Well, wait a minute. We got a little yellow here. They're beginning to meander back and forth. Yep, market's improving. And then, of course, as I've been preaching, you still have to look at the net price change. And you can see 38.57 basis cash. And you go way back in time. Now, this is a 60-minute chart. But you can go days and days and days back to last week or even past last week and see that we hadn't made a whole lot of progress on a net basis. There you go. Draw your line. Look at today's price and draw your line backwards. I call it the Rip Van Winkle test. Pretend you fell asleep and you wake up a month later and you see the market is the same place it was. In this case, 6 or 7 days later. So again, always pay attention to that net price movement. Now, just to geek out on you a little bit, let's take a look at that 4-hour chart. And this might be my new little friend, the 4-hour chart. But notice the reds, yellows, red, yellows, reds, yellows, okay? So this is kind of like Aussie Man on the downside. It's kind of like, nah. And then, yeah, maybe it's improvement here. It's going yellow. Nah, it turns right back down. Yellow, maybe we bottoming. Nope, back to red. Yellow, maybe we're bottoming. Aha, we got some green here. Maybe we are bottoming, he tried to say. But you can see uptrend proper order on the 4-hour chart for a ways here. Again, 10 greater than 20 and 20 greater than 30. Now the daily chart, nope, we don't quite have proper order yet. And today's action is going to probably mess things up a little bit. If the close stays above the moving averages, eventually we will go back to uptrend proper order. But you can see we went from red, which we were at for a long time, and now we're back to yellow on our way to green, hopefully, a word you should never use in this business. But you can see that 10 is greater than 20, but the 20 not greater than the 30. So as long as they're not in perfect uptrend and downtrend order, you're going to have yellow. And again, let's get back to that net price basis. This is a daily chart. You can see what's at about 6 days of sideways action. Yeah, we had some big ups, but we also had some downs, at least at the time I captured this chart. Weekly chart, as you would imagine, is still in downtrend proper order. By the way, I've showed these charts so many times, especially with the major bull and bear markets, that one client's like, please stop. I'm like, well, there's new people coming in and need to know these things. And sometimes I need to relearn them and see them myself. But just proper order, and this is where I geek out again, look on a weekly, can really help to keep you on the right side of the market longer term. Now, you get something like the pandemic, as I talked about quite a bit, because of the lag on a spike bottom like that, on a big old fat whipsaw. Now, that was like a 30% whipsaw, by the way. If you didn't get out the way for that, then shame. One of my clients sent me a shame bell. Where is that thing? Oh, here it is. So I'm supposed to ring the bell whenever I do something shameful in trading. But anyway, yeah, you should have certainly gotten out of the way for that whipsaw. And, you know, maybe you didn't know of all these little systems and stuff then, but now you do. So next time, you want to get out of the way. But anyway, look at that nice green weekly chart going way back in time. And look at these things historically, and you're going to be amazed, especially like 2000 and 2007. They just sort of gradually rolled over, and then they flipped over to downtrend proper order very early in the bear markets. Anyway, you can see they begin to meander earlier this year. Notice that we turned yellow. Okay, a little caution there, right? Green, caution, and then the red. And we've been mostly red all year. We did have a little bit of action here where we tried to get a little bit of a rally going, but the market rolled right back over, unfortunately. So mostly red for last several months on a weekly basis. And again, the net price action mostly sideways. This time I'm looking at the net as an actual positive, though. If the market is to bottom out, it will likely have to go sideways for a while. And one way to kind of rephrase that too is if it goes sideways for a while, it gives the market time to adjust to those lower levels and build that base. And I thought it was my own little wisdom here, but the bigger the base, the bigger the launch into space. That's Ralph Acampora. I met him at ChartCom a couple of weeks ago. He is a trip. In fact, we shared a ride to the airport. So TFM 10% system, there is not a buy, and it's going to take a while for us to get a buy on this unless the market really does some fantastic things. But I wanted to show you something that's kind of cool here. I think that helps to illustrate the points. Notice that I set the percent of close at 10% or 90% of the 50-week closing high. And just for S&Gs, I also set it at 100%. So to give you a visual representation, it's this close here, which extends forward. Okay, now it's going to take 50 weeks for that to begin to adjust and to begin to drop. And right now we're in 43 weeks. And you can see this little close here. That was the last sell signal in the TFM. So 43 weeks since that closing high. As soon as we hit 50 weeks, this is going to be the new closing high. And then that's going to be a new closing high at 51 weeks and so on and so forth. So what's going to happen is this little green line in here, which is 10% away from its 50-week closing high, is going to start to ratchet down, sort of like a moving average. So this system will eventually begin to catch up to price, and we'll get a buy signal at lower levels. This TFM 10% system has a little lag sort of built into it and works really good at getting you in at low levels when you get into this extended bear markets that last nearly a year or longer. In fact, the longer they last, the lower it's going to get you in. But there will be some whipsaw along the way when you have like a spike bottom. But if you look at some bottoms like, I'd say 2008 would be a really good bottom. And I think was it 2002, 2003 bottom, which took about 2 years. The buy line, that 10% line, dropped really low. It got you in pretty early in that bull market that followed those bear markets. Okay, so again, keep in mind that bigger picture market timing is a good thing. But we begin with the database. I look for stock setups first. Sometimes I find some really great setups on the long side, even in bear markets, maybe the golds, maybe the energies or something like that, taking off. We're in a coal stock we've been in for almost 2 years, and we've been able to hold that through the bear market. It's doing great this today, actually, knock on wood. As I preached earlier, entries will help keep you out of trouble. It always amazes me how much trouble waiting for an entry can keep you out of. Now, as I said last week, if the market does improve, we'll get shorts. And I've been seeing some shorts, nothing to get too excited about lately. And then if the market keeps going up, eventually we'll start getting longs, especially on pullbacks, because as you know, I'm mostly a pullback trader. Well, that's my time for this week. Thank you guys and gals for watching. I appreciate it very much. If you need follow-up information, DaveLandry.com/StockCharts. If you need to reach me, DaveLandry.com/contact. Thank you guys again for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.